Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have back the CEO, Ali Tajskandar from Wishpond Technologies. Wishpond trades on the TSX Venture Exchange under the symbol WISH and on the OTC under WPNDF. The company is currently trading at $1.27 with roughly 52 million shares outstanding, or about a $66 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. Great to have Ali back. Ali, it was about 11 months ago we last spoke to you. So clearly a lot has happened since then. Congratulations certainly on this last quarter, 90% revenue growth. So we'll dive into that at some point here shortly. But before we do, maybe just remind everybody what Wishpond Technologies does.
Well, thank you very much, Paul, and thanks for having me back. I'm very excited to speak to your audience about Wishpond. So what Wishpond does is an all-in-one marketing platform for primarily small businesses. And what I mean by that is it's really their platform that is built to help them grow their businesses online. So anything from building their website to running promotional campaigns, running email marketing campaigns, sales campaigns, different analytics, SMS marketing, all of those in one single platform so that they have best chance of success.
Okay, so let's dive into it. So 90% revenue growth, clearly you guys are onto something here. What's transpired in the last 11 months? Why are you guys growing so fast?
So a lot of things have happened actually over the past year. We went public December of 2020, and last year was the first year of us being a public company. And we invested a lot in our growth, in terms of organic growth with sales expansion, as well as product team, we expanded it, as well as acquisitions. So over the past year, we made 4 acquisitions that we can talk about a little bit later as well, that we're very proud of, and they've helped quite a bit. And also we doubled the size of our sales team. So the year before we had 12 account executives. Last year, we grew that to about 24, 25 account executives, which basically meant that we were able to more or less, we expect the year to be around 80% year over year growth, half of that coming from organic sales expansion, and about half of that coming from the acquisitions that we made. So we're still maintaining that 35, 40, 45% organic growth per year, and now adding the acquisitions to it as well. And the other thing that is also very exciting for us is we have a history of being profitable 2 years prior to going public. And then the first 2 quarters of 2021, we went into the negative as we were expanding the sales team, as we were investing in the product team, and we were also setting up infrastructure and personnel and everything else to be able to handle being a public company, handle multiple business units that we acquire, and set everything up and put them in place. And because of that, the first 2 quarters of last year, we were slightly in the negative. And then the second half of the year, as we had mentioned in the third quarter, we were back into adjusted EBITDA profitable levels. And we expect that to be the trend going forward, continuing to be adjusted EBITDA profitable while growing aggressively.
Clearly, you've made a significant investment in sort of salespeople or the sales program. Is that something that you have you sort of spent the big spend, or do you expect to continue to grow your sales staff? And just trying to get a sense of, is the spend as a percentage of the overall business going to decline? Is it going to stay stable? How can we look at it?
So you need to look at it a number of ways. One is that this year we plan to double the size of sales team again. So from 24 to 48, that kind of number, or 45, 46, that kind of number. And that is important because we want to continue pushing the envelope in terms of organic growth for Wishpond and the business units that we've acquired. And then, but I think what is important also is that we plan to do that while still maintaining adjusted EBITDA profitable levels. We don't plan to go in the negative, at least not in any long-term ways, and not in any significant ways. We plan to more or less balance that or be under profitable, and anything in addition to that, invest in the growth of the company.
Perfect. So why don't we jump into some of the acquisitions you've made? Clearly, it's a big part of your strategy. Tell us what you've done so far and kind of what the future looks like for potential acquisitions.
Yeah, we made 4 acquisitions last year, more or less, let's say 1 per quarter. One is Invigo, which is a medical and healthcare providers marketing platform. The second one that we did is Persist IQ. That is for sales automation, basically helping B2B companies with their email campaigns and sales campaigns. And the third one, Brax, which is a unified ads management platform. And the fourth one, the most recent one, Winback, which is an automated SMS marketing platform. All of them helping fill certain gaps with our platform, but are also setting the stage for growth in the coming quarters. What is, I think, perhaps most important is the way we look at acquisitions and the criteria that we have, and how we pay for them. There are a number of things. One is that we're basically looking for companies that are substantially or all recurring revenue, MRR-based kind of revenue. We're looking for companies that have high margins. We're still maintaining that 65-70% margin with the acquisition, and they have similar profiles to ours. We're looking for companies that are profitable. 3 of the 4 acquisitions have 20% EBITDA profits, and one of them 15% EBITDA profit. All of them profitable so far. Or if we make an acquisition that is not profitable, it has to be something that very quickly we can turn it into profitable. But so far, they've all been profitable to begin with. And we also want acquisitions that are accretive to our investors. So we don't want to overpay, and we want to have a margin of safety. So even though they're strategic and they are helping us and they're rounding the corners into the product offering, but financially on their own, they should also make sense as individual investment opportunities that we can sleep easy at night. So those are some of the really important elements. And I think the last one, perhaps one of the most important elements also, is that is this a sort of company that we feel we have enough expertise and enough ammunition and manpower or woman power to be able to grow them substantially more than they have grown in the past. So as an example, is this a company that can benefit from our shared services and we can put our own sales channel and grow their revenue? Is this a company that can take advantage of our marketing services? Is this a company that with the clients that we already have, they can immediately sell into that pool of clients that we have and grow as a result of that? So a lot of those elements are quite important for us, so that we're not just getting them and staying still, but getting them and help, and having them help us and have a multiplier effect in terms of how fast we can grow.
Ali, how do you typically acquire these companies? What do you look for? Is it an opportunity to buy it with cash, stock, combination? What's the typical acquisition look like?
Each deal is slightly different, but we look at it in terms of deal structure as a combination of 3 elements. One element is cash, one element is stock, and another one is earnout. So earnout would be helpful in terms of aligning interests with the former owners and founders, and making sure that as growth happens, everyone can contribute to that and everyone can benefit from that. And the cash stock component is so that our cash can go further. Now, as I said, each deal is different because you might see that, our stock price is undervalued right now. We don't want to use our stock that much. We think it would be too dilutive. Then we would use more cash. Or there could be another time that we feel like stock price is such that it does make sense for us. Or given the opportunities that we have coming, we want to preserve some of the cash. So it really changes. But the default place, the default template that we start from is 1/3, 1/3, 1/3 cash, stock, earnout, and then we go from there. And the multiples that we paid so far has been anywhere from 1 and something times, let's say 1x multiple of top line revenue to close to 3x multiple. So we keep a very close eye on that as well to make sure that it makes sense. Internal rate of return makes sense, return on cash makes sense, and a strategic value makes sense, and we can grow it. And it's profitable.
Yeah. And what does the pipeline look like? Are you actively out there right now looking at other deals? And is it a robust pipeline? Or are they scarce?
Yeah. It's very robust. I'll mention, I guess, how we look at acquisitions in terms of how we source them. Last year, we looked at about 400 M&A opportunities.
Wow.
To make the 4 acquisitions. So it's a very active pipeline, and we look at it the same way our sales team looks at it. There's a specific individual, our head of corporate development, that is always sourcing different opportunities. There's some elements of inbound, some elements of outbound outreach, and then we set up the management meetings and do the information requests and all the rest until we find those few gems that we're really comfortable with and we feel they can really add a lot of value to the company and to our clients and future growth. Coming into this year, we're continuing the same trend and the same pipeline, except it's even stronger than before because some of the ones that we started last year are still in the pipeline and they're coming to some kind of conclusion. We have several very hot opportunities right now that we're looking at, and we expect this year is going to be great and a continuation of what we did last year in terms of acquisitions.
Mm-hmm. And how do you describe your capacity or capability right now to do deals? I think at last I saw you've got over $7 million in cash right now. What does the balance sheet look like? What does your capacity look like?
Yeah, more or less, let's say $7 million of cash and $6 million of line of credit available. So there's a lot that we can do there, and because we're not bleeding a lot of money for our own operations, that means that the money that we have can actually go into sourcing deals and investing in the deals. And if you think about 7 million cash and 6 million less a line of credit, and also there's more cash coming from clients as well, that alone, the balance sheet would be about $13 million of cash. And if you do 1/3, 1/3, 1/3 deal, then that means basically that $13 million can get you $39 million worth of acquisitions. Now, obviously, we wouldn't want to use all of it. We want to have enough buffer, enough wiggle room there. And some of the deals are not going to be 1/3 cash, but there's a lot of ammunition that we can still execute on. And when the stock price better reflects what we think is a true value of the stock, then we might go to the market and raise more, but not at the current prices.
Now, your marketing platform, marketing technology, maybe give us a sense of some of your key products. Like what do you do and how does it affect your customers?
So there are some similarities between Wishpond and HubSpot for those who are more familiar with HubSpot. But think about it in terms of a normal business who uses Wishpond. They use it a number of ways. Some use the platform self-serve and they just run it themselves, and maybe they're a little bit more marketing savvy or they want to use the technology themselves, and that's great. There are also a category of clients who want our help, and then we have account managers that we can assign to them so that they give them access to our pool of resources in terms of design, ad copy, all of the SEO, all of those things, so that the clients have the best chance of achieving success with the platform. But now to get a little bit more concrete about what you get using Wishpond, you can use Wishpond for your landing page builder or your website builder. So you can use, we have a drag and drop editor that if you know how to use, let's say, PowerPoint, you can also build a website and build landing pages with Wishpond. It's one of the best ones in the market. And you can also, if you run ads, you can use that. Then we also have a suite of promotional campaign products. So running contests and giveaways and social media referral campaigns and, leaderboards and bonus entry, all of those things, so that you can actually create a buzz and bring audience to yourself. We have different lead generation tools such as pop-ups and forms that you can put on your own website as well, and call to actions. Then we also have email marketing platform for, similar to MailChimp, for sending newsletters or for sending triggered email campaigns and what have you. Then we have lead segmentation and lead tracking. So if I go to wishpond.com, and wishpond.com obviously is using the Wishpond product, you can see Ali came back to the website, checked out these pages. He started watching a video on this page and then paused halfway through it. And then he entered this form. We sent him 2 emails. He opened the first one, but not the second one, and clicked on this link. And here's everything we know about Ali in terms of what he's done, his purchase history, as well as where he comes from, all of those things. And then based on those, you can actually set up automation campaigns to better target me, provide better value, and have better conversion. And then there's sales automation campaigns. There's the SMS marketing, ad management. It's a long list, but it's very robust and very comprehensive.
Fantastic. A couple things I noticed. New CFO. Am I correct? Yeah.
Yes.
What can you tell us about sort of your I guess your current management team, but what other sort of people, resources, what else do you need to keep building this business?
So with our CFO, the previous CFO, we were actually quite happy with, and he was someone who helped us with going public and helped us with the first 4 acquisitions that we've made, and set up a lot of processes that prepare us for growth coming into the next years of the business. But at some point, he had other entrepreneurial journeys that he wanted to take, and working on that. And when we had that conversation, then we started looking for different individuals. And when we had conversation with David Pace, our new CFO, I was immediately very excited and happy, because I could see strategically we aligned really well, and he had the right mind for it. But also in terms of his background, he has been a CFO of different tech companies for 20 years. He was a senior VP corporate development at Ernst & Young before, so M&A opportunities and executing on them. He has a lot of experience with that there, as well as afterwards. He has IR experience. And basically, it was an opportunity to bring someone with more experience that now prepares us for the next stages of growth and putting things in place so that things can become more seamless. I think we have a very solid team right now. I don't anticipate any major changes in terms of executive team or anything like that. There might be, additions to the board from time to time to add, more firepower on that end, and it's already a very strong one. But I think coming this year, we're going to execute the same strategy we executed last year, and it's working quite well.
Okay, so new CFO, you've increased your salespeople, you've made a couple acquisitions. What other new initiatives or even products can investors look forward to in the next sort of in this year?
I think there are a number of things. For example, I talked about website builder. We have our website builder is more of an individual pages kind of builder, but we want to make it more robust so that more and more of the clients actually rely on it for running their website fully on it. And right now is a smaller percentage. That to us is quite important, and it's something that we're working on. There are different components of the platform that we're making deeper, and there are certain components that we don't have that we're going to add. The product team is another one that we're investing in and growing it this year. But also, I think another one that is also important, we've already started integrating the different companies that we've acquired into the same technology platform so that they wouldn't be purely in their own silos, but you would have single sign-on capability, and you can easily move between them. And there's more natural integration and those points of contact between them. And that's going to be another area that we're going to focus on this year.
And just generally, how can an investor sort of look at your business for 2022? What's the outlook for the company and the business?
We don't give guidance,
Mhm,
but
mhm.
but the three analysts that are covering us, okay, so let me backtrack. Last year's revenue, they expected to be about $14.5 million, 80% growth compared to the year before. This year, they're putting their estimate at around 21.5 million, around that for this year. So already substantial growth, but their assumptions are based on organic growth actually. M&A is harder for them to anticipate what kind of deals we're gonna do, so they don't think about that until it's actually done. So you can think about it, organically probably 21 million, and then add a few more acquisitions, and it adds up. I'm not going to mention an exact number, but you can do the math yourself.
And I guess historically, what's been your gross margins? How do we look at some of the metrics to your financials? I imagine as you grow, you take on other acquisitions, that's going to be all over the place. But historically, what's a number you feel comfortable sort of saying as far as a gross margin?
We are operating between that 65-70% margin. Mm-hmm. And the acquisitions that we're looking at, we're trying to be around that or higher. We're very conscious about not making an acquisition that would lower that profile. That's quite important for us.
Mm-hmm. Okay, good. And then I guess apart from the increased sales staff, do you see any other increase in any specific expenses? I mean, your G&A should, I'm imagining, outside of your sales, should stay relatively flatlined. Is that correct?
Yeah, more or less. I mean, as a percentage, it might grow because you add substantially more clients, then certain elements in terms of serving those clients also increase. But the fixed expenses for most part are going to be fixed. We don't expect a lot, and that's why when you look at the analyst forecast for next year, they expect at least $1 million or 1.1 million adjusted EBITDA as well, on the positive side, because they can see, we're not, the fixed costs are more or less going to stay constant, and now we're going to have more and more revenue on the top line that is going to lead to the bottom line.
Okay, perfect. Okay, so we always kind of ask this question, and what are sort of the key metrics or catalysts that we should watch out for sort of over the course of the next year, so that investors can sort of validate that you guys are continuing to build on your business? And I understand you're going to do some acquisitions. It's always hard to time. Revenues are clearly easy to see if they're going up, but is there anything else we should sort of keep our eye on to see that you guys are going in the right direction?
I think more than anything else is really revenue growth, right? When we went public, we were quite unknown to some extent. To a large extent, we still are unknown, but I think more and more of the investors that are following us are establishing trust with us that we're doing what we said we would do. And the revenue is growing as we said it would, and the customer growth is happening, and the acquisition is happening the way we did. Obviously, you can't, expect that you would never have any turbulence, but we're doing what we had said. So now coming into this year in terms of catalysts, our Q4 financials and annual financials for 2021 are going to be released sometime in the next 2-3 months, and then that itself is a catalyst, and then followed by the Q1 financials. There are acquisitions that we're going to make, and yeah, you're right, you can't time it, but I think that's part of the fun as well, that you can never really find the exact time to come in, and if you believe in the company, you shouldn't try to time it. You should just you want to be part of this company, and you believe in what the company is doing, then come in whenever you can. And there are more product announcements that are going to come out. There are partnership, a lot of really interesting partnerships we're working on that we would announce. And I think what is very interesting about this market is that there are millions of small businesses in the world, and we serve more than 3,000 SMB clients. is we're really scratching the surface. There's a lot of them. We have a profitable and scalable way of reaching these small business clients. We have the breadth and the depth of product offering and service offering to be able to help them and serve them. And I believe that we give them a very good chance of becoming successful in achieving their growth objectives for our clients. So that to me is exciting, that this is a market and an opportunity that is only gonna grow and become a lot larger. And that's the reason that we decided to go public as opposed to exiting or something, because we feel, and I truly feel, that this is a company that's going to be substantially larger in a relatively foreseeable future, and doing what is really worthwhile in terms of enabling the small businesses.
Mm-hmm. And Ali, what, you're still a relatively, like you said, unknown, publicly traded company. You're a micro cap, I guess, and some would say nano cap. What do you see as your biggest challenge? You're the CEO of the company. What's your biggest challenge you're facing right in this business right
now? What is the biggest challenge? I think a number of things, right? I think one of the biggest challenges is that when you're growing fast, it's kind of like a rocket ship that is exciting and all that, but at the same time, you need to actually grab on for dear life and make sure that there's no deviation, because even small deviations can really quickly get you off the rails. And we try our best to make sure that we have a good handle on all of those elements in terms of growth, in terms of putting the right people in the right jobs to help, in terms of customer acquisition. Attracting and retaining good talent is always a challenge, especially in this market that definitely is an employees market. So that's going to be a challenge as well. I think also over the past year, we had in the micro cap or a small cap or even nano cap, you saw that there was a lot of shift in terms of where the investors were putting their money into some larger companies, and now there's another rotation happening again as well. And because of that, I think one of the challenges to some extent in terms of the stock was that the stock was undervalued, and still I feel it is. Now that's on that side of it, but at the same time, the company is continuing to grow. We grew by 80% year over year. And the stock price is it's a matter of time before I believe would reflect the true worth of the company as well. So I think to some extent the way we look at it is that there's a threshold as well, that 14.5 million, let's say last year, when we get to 25, that kind of revenue run rate, you almost get into a new territory, and you're looked at by a broader set of investors. And the multiples also increase as a result of that. So our focus is, let's continue executing on what we've done, and we get there, and everyone will be happy.
Let's touch on that. We rarely get an opportunity to really talk to micro caps that have any analyst coverage. You've got 3 analysts covering you. What's kind of been the communications right now with any kind of institutional entities? Are they looking? Are they sort of kicking the tires? I imagine you've got some institutional ownership already, but give us a sense of sort of what's the temperature out there with some of these institutions?
Yeah, I think that's a very good question, and your observation is correct that in smaller kind of companies, generally you don't have as many analysts' interest and coverage. And we have 3 analysts covering us, and a 4th from Desjardins Bank that also published a report about Wishpond, and it was a very elaborate and a fantastic report in terms of the depth of understanding of the business and the opportunity. And I think the reason that we are getting that interest and coverage from these analysts is that they see where the business is heading, and is something that they're getting comfortable with, and they've got comfortable with, and increasingly there will be more that would want us to be in front of their clientele. And already we have several institutional investors in the company. They've been very supportive of the company. some of them in their own newsletters. They've talked about Wishpond and where we fit in their investment thesis. Some of them are buying on the market from time to time. And some of them, in some of the conversations that we have privately with them, there's additional interest and support that we hear from them. So I'm very happy and very, very thankful for the support that we got from our retail investors as well as institutional investors. And I think that's probably to a large extent that you see a lot of growth companies in the past few months got hit a lot more than Wishpond did. I think to a large extent, actually, after our Q2 financials after summertime, we started growing back in terms of stock price and quite stable, even though the market as in broader terms wasn't as stable.
Mm-hmm. Mm-hmm. Listen, we're sort of at the end here. What we always like to do with you guys is just give you an opportunity to sort of leave a parting message or a key takeaway. What do you want to make sure that everybody understands about Wishpond today?
I think to some extent I've already talked about the key points to think about Wishpond, but to me, what is really important is that this is a company that believes in responsible growth, aggressive but responsible growth. We want to continue being adjusted EBITDA profitable while investing in growth and growing organically in aggressive ways, having acquisition opportunities to make that acceleration happen as well. And again, look at the universe of opportunities that we have ahead of us, as well as our ability to reach them, and as well, in addition to that, our ability to serve them with the products that we have and the offerings that we have. So that is what makes me excited about where we are. And if someone is interested in learning more about Wishpond and all of that, I would invite them to have a look at our investor section of the website and learn more or reach out.
Oh, perfect. And just remind us the website address. What is the website address?
Wishpond.com/investor or investors, but it's in the menu, investors in the menu.
Wishpond.com, and then you can find it from there. Perfect.
Correct.
Well, listen, congratulations on a phenomenal year.
Thank you.
Not too many companies are growing at that kind of pace. You guys have managed a number of acquisitions. Again, that's a challenge for any company, let alone with one, let alone with four. So congratulations on that. Ali, it was great to get caught up. Great to understand where you guys are right now. And so we've been speaking to Ali Tajskandar, CEO of Wishpond Technologies. Want to thank you again and look forward to catching up with you in the near future.
Thank you very much, Paul. Thank you, everyone.
Thanks, Ali.